In today's rapidly evolving economic climate, investment trends are shifting remarkably. A recent surge in demand for coal has been met with a tightening grip from Western banks, who are placing restrictions on lending to the coal sector due to climate pledges. Yet against the odds, global investments in coal supply are on the rise, with China taking the lead. Outside of China, coal miners are grappling with a funding crisis, as environmental lobby groups ramp up the pressure and major Western banks such as Deutsche Bank and Citi scale back their lending. As traditional sources of funding dry up, these miners are left scrambling for alternative sources of cash. Despite the attractive short-term returns for investors, long-term plans for investing in coal are becoming less common. Moving on from traditional sectors, let's delve into the world of media and the role of activist investors. Take, for example, the recent maneuver by ValueAct Capital Management. They acquired a 6.7% stake in the New York Times and are lobbying for a diversified product offering akin to Netflix. They posit that subscribers would be willing to pay a premium for a package that includes news, product recommendations, even crossword puzzles. However, this strategy is not without its risks. The Oaks-Sulzberger family, who has a firm grip on the company, may not be easily swayed. Plus, the New York Times is currently trading at a robust valuation, with a price-to-earnings ratio of 31. But don't count out ValueAct just yet. They've had their share of victories in the past, successfully targeting companies like Olympus and JSR in Japan. While this move is seen as risky, it's a testament to the evolving nature of investment strategies. As we continue to navigate the investment landscape, one area that's making waves is the digital lending sector. The rise of digital lenders is changing the face of finance, and nowhere is this more evident than in South Korea. Take, for instance, the successful debut of KakaoBank Corp in Seoul. Not only did it make a splash on the market, but it also rose to become the country's largest financial services firm by market value. This isn't just a success story for KakaoBank, but for the entire investment banking industry in South Korea. Investment banks are raking in record fees from equity underwriting thanks to a surge in initial public offerings, or IPOs. This year alone, the total fee pool for equity capital market deals in South Korea has reached over $300 million, significantly surpassing the totals for both 2020 and 2019. The amount of capital raised through IPOs is equally impressive. This year, over $17 billion have been raised, quadrupling the amount raised in 2020. And the momentum doesn't seem to be slowing down. LG Energy Solution, for example, is expected to have the largest ever IPO in South Korea later this year, with projections of raising between $10 to $12 billion. This surge in IPO activity has proven to be a boon for both domestic and foreign investment banks. Global giants like JP Morgan and Goldman Sachs are leading the equity capital market fee league table in South Korea for the first time in 3 years. The surge in IPO activity in South Korea marks a significant shift in investment trends, indicating that digital lenders could be the next big thing in the investment world.